And welcome to Smart Stock Watch. Today is October 23rd, 2025, and we're diving into the latest earnings report from First Citizens Bank shares. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss First Citizens Bank shares, a top 20 U.S. financial institution known for its strength and stability. Let's explore their Q3 2025 earnings report.
Revenue and profitability overview. Let's start with the financial highlights. First Citizens Bank shares reported a net income of $568 million for Q3 2025. John, how does this compare to their previous performance?
First Citizens saw a slight decrease in net income from the previous quarter, which was $575 million. However, their adjusted earnings per share of $44.62 exceeded the forecasted $41.51, indicating strong profitability despite the minor dip in net income.
And what about their revenue streams?
Net interest income increased to $1.73 billion, up by $39 million from the previous quarter, driven by higher interest income on loans and investment securities. Non-interest income also rose to $699 million, reflecting gains from asset sales and increased client investment fees.
Operational efficiencies and future outlook. John, can you elaborate on First Citizens' operational efficiencies and their strategic initiatives?
Absolutely. The company achieved significant loan growth of $3.49 billion, primarily in their SVB Commercial segment. Deposits also grew by $3.26 billion, enhancing their liquidity. Additionally, the acquisition of 138 BMO Bank branches is a strategic move to expand their footprint and support future growth.
And how are they managing shareholder value?
First Citizens completed a $900 million share repurchase, reflecting their strong capital position and commitment to returning value to shareholders. This, along with their robust capital ratios, positions them well for future opportunities.
Credit quality and risk management. Let's discuss credit quality. How is First Citizens managing risks in this area?
The provision for credit losses increased to $191 million, reflecting higher net charge-offs, particularly from a single client in the commercial bank segment. Non-accrual loans rose slightly to $1.41 billion, but the allowance for loan losses remains robust at $1.65 billion, indicating prudent risk management.
What does this mean for their overall risk profile?
Despite the increase in provisions, First Citizens maintains a strong risk management framework, with a focus on maintaining high-quality loan portfolios and adequate reserves to cover potential losses.